Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be discussing a problem which is related to sinking fund. We'll understand with this illustration how to solve the sinking fund issues and how to pass the journal entries for it. So when we speak about sinking fund, we already know that we have 3 steps to follow. The first year process, the subsequent year process, and then the last year process where the asset is sold out. So let's figure it out with an illustration that we'll be mentioning down here. Let's go ahead. So as you can see, we have mentioned the question here. Let's get to the questions in detail and understand how to do the working. A and B Private Limited purchased a machinery on lease on 1st of April 2012, and this was for rupees 10 lakhs, and this was for a lease on 4 years. That means at the end of the 4 year, this asset will go out and a new asset will be replaced instead of this. So here we have the calculations for 4 years itself. So from 2012 to 2016, this will be the 4 years that will be calculated. But now that this is April, it will be for 4 years like this. 2012 to 2013 is 1 year, 12 13, 13 14, 14 15, and 15 16. This will be the financial year that will be calculated. Now let's go ahead with the question. The expected return on investment is at 5%. That means whatever investment we make as a part of the depreciation, it will fetch 5% return on it. Now, the sinking fund table that they have, they show that if you invest rupees 1 right now for 4 years at a compound interest of 5%, it will fetch you 0.232012. This is the value of that specific investment after 4 years. So whatever depreciation will be there will be calculated on the basis of this table itself, because this is the investment that we have to make. At the end of the 4th year, this investment was sold out for 7,50,000. So we have to prepare the journal entries for this. So let's go ahead with the journal entry preparation. But before that, let's do the calculation first. We'll get the timeline prepared first so that you can understand what needs to be done. So the timeline has been prepared and we have understood what all details have been mentioned here. So the lease value is rupees 10 lakhs that has been mentioned. The tenure is mentioned as 4 years. And again, with the rate of interest of 5% for 4 years, if you invest rupees 1, it will fetch you 0.232012. This has been also mentioned in this specific timeline. Now this investment was sold out for rupees 1,50,000. We'll further go ahead and prepare what all details are supposed to be mentioned in the working note. So let's go ahead and prepare the working note now. But before that, also to let you know, let's figure out what is the amount of investment that you have to make. So now that we have mentioned that this investment will fetch you around 2,32,000, or rather we can say 0.232012 has been mentioned here. What is the depreciation amount will be fetched according to this investment itself, because that is the investment, or rather this investment that we have to make is the first year's investment, and the first year's investment is the amount of depreciation. So depreciation hasn't been mentioned in the question, but it has been mentioned in this hint. So let's figure out how to calculate the depreciation. So the amount of the depreciation is equal to the first investment that is made. So this is the depreciation amount, that is 2,32,012 rupees is the depreciation and the first investment amount. So according to this, we'll go ahead with the working note. So let's prepare the working note and understand how all these columns will be easy for you to understand the whole process of the reinvestment and then adding up interest and then moving to sinking fund and then reinvestment process. So let's understand with the working note first. So the first year's investment has been mentioned. If you can see, we have prepared certain columns for you. Let's highlight them. The first column shows year, that means the 4 years that we have to deal with. The second column shows the opening investment. The third column shows the interest on it. The fourth column shows the investment at the end of the year. That means the opening investment plus interest on it. That is the total investment at the end of the year. The next column shows the total investment here. And the last one shows the closing investment. Now, with all these columns, you understand that for the first year, there is no opening investment, there is no interest on it. It is only the total investment made and the closing investment that we have done. That means the amount of depreciation that we have put for the investment for the first time in the first year. So that's what we have mentioned here. Now, this second, or rather, this closing will be the opening of the next year. So let's figure it out how it is done for the next second year. That means for 2012-13 we have done, we'll go ahead with the 13-14 calculation. Now the opening investment for the year 13-14 is 2,32,012 rupees. On that you have to figure out 5% investment, or rather the interest on this kind of investment. So if you can see, we have mentioned the working for the second year as well. Now the opening investment that we have done here is 2,32,012 rupees, which is taken from the previous year's closing. The interest on it at 5% gives you 11,601 rupees. So the investment that is done at the end of the year is the same depreciation amount that we do as an investment part. Now the total investment will include interest plus the investment, that is interest of 11,601 plus the basic depreciation amount being put as an investment, that is 2,32,012 rupees, which gives you a total of 4,73,000, or rather you can say 2,73,000 here, which gives you a total of 2,43,613. Now this is the investment for the second year, but when you say about closing investment, it already has a previous investment which was done in the earlier year. So the closing investment now will have the closing of previous year as well as this year. So that total is 4,75,625 rupees. Now, if you can see, we have mentioned the closing investment. Now, this closing investment will be the opening investment for the next year. So, 4,75,625, which you have closed in the earlier year, will be the opening for the year 13-14, which has been closed. Now, it will be for the 14-15 year opening. Now, this amount is the opening investment. On this, you will calculate 5% interest. Now this interest has been calculated. Again, the investment that you will be doing at the end of the year is the amount of depreciation itself. Hence, this will include 2,32,012 rupees itself. But the total investment will be the investment that you have done at the end of the year plus the interest on it. That will be the total investment, and that will be added with the previous year's investment of closing. Now, if you can see, we have mentioned the total investment at the end of the year as well as the closing investment. Closing investment includes this investment plus the previous year's closing. So that gives you the total which has been highlighted there. Now that closing will be the opening for the next year. On this specific opening investment, you will calculate 5% interest on this, which will be somewhere around 36,000. So let's mention that. Now, as this is the last year, that means there will be no depreciation that will be invested. Hence, whatever opening is will be the closing, because at the end of the year, there is no investment that you are making. Hence, whatever the opening will be the closing investment here. And this is only in the last year now. So now if you can see that this is the total working that we have done. Now, if we can see, what we need to figure out is whether there is a loss or whether there is a profit. So how do we do that? If you remember, this investment was sold out for rupees 7,50,000. Now, what you need to check is the book value of this investment at the end of its lease period. Where do you find it? Correct. That's the closing investment value at the end of the last financial year. That means the last lease year. Here it will be 7,31,418. So that is the book value of that investment. And at what price it was sold is something that you have to check further. So let's go ahead and figure it out. Now that we know that the book value of this specific asset was 7,31,418, however, it was sold on 7,50,000. So the sale price is more, whereas the book value is less. So that means there is a profit here. So that profit will be figuring out. Now let's go ahead with the journal entries for first year, subsequent years, and then for the last year. So if you can see, we have mentioned the first year's entry. The first entry refers to purchase of that specific lease, or rather that asset. So lease account debit to bank account for rupees 10 lakhs. The second one refers to providing depreciation to sinking fund. So depreciation account debit to sinking fund. Ideally, it is charged on the asset. So depreciation to asset is the entry that we've passed. But now that we have specialized in this sinking fund method, so depreciation to sinking fund will be the entry that will be passed. Now, simultaneously, when you pass the depreciation, you have to move it to profit and loss account as well. So profit and loss account debit to depreciation account will be the entry that will be passed here. And finally, whatever sinking fund investment we have made, or rather sinking fund has been created, that has to be moved to sinking fund investment. So investment account will be created. So sinking fund investment account debit to bank account with the same amount of 2,32,012 rupees. This closes the entry for the first year 2012-13. We'll go ahead with the second year entry. Now in the second year as well, the first entry that will be passing is the receipt of the interest. So bank account debit to sinking fund, because that interest is supposed to be moved to the sinking fund account. So that amount of interest of 5% will be moved to sinking fund. So that is the entry that we have passed. The next three entries remain the same. The only difference is that in depreciation, you provide the depreciation first. So depreciation to sinking fund, you pass on the same entry. Simultaneously moving that depreciation to profit and loss account, again profit and loss account debit to depreciation is the same entry that you pass. And third entry as well, that means you create a new sinking fund investment account. So sinking fund investment account debit to bank account is the same entry, but the amount difference is here. So you don't invest 2,32,012 as compared in the first year. You add the interest that you have earned in the last year's investment and you add it with this investment, and then you mention the total amount of 2,43,000 here. So that's what we have mentioned here. Let's go ahead with the third entry, or rather the third year's entry. For the third year as well, more or less is the same thing that we have done in the second year, so we need not explain this any further. The first entry refers to the interest that we have received with the amount mentioned. Second entry will refer to the depreciation amount that has been provided to sinking fund. Third entry will refer to moving of the depreciation to profit and loss, and the fourth entry will refer to sinking fund investment moved out from the bank. But the only difference is that in sinking fund investment, that is in the last entry, you will pass the total of interest amount as well that has been earned plus the depreciation amount that is supposed to be invested. Let's go on to the last and the most important part, that is the fourth year's entry. So again, in the last year, the first four entries remain the same, so we won't go ahead and explain it. We'll go ahead with the next entries, that means the fifth and the sixth entry. However, in the fourth entry, we have to mention that as this asset has been sold out, so bank account, that means this investment has been sold out. So bank account has been debited with 7,50,000 to the book value of the investment, that is 7,31,418, and the difference between them, as there is a profit here which has been mentioned down here, 18,582. Now the next two entries that you have to pass is that you have to move this profit, or rather you have to put this lease into the sinking fund account. So the lease that was taken, that means this lease will be moved to close the sinking fund account. So sinking fund account debit to lease account 10 lakh rupees. Lease which was created earlier has been closed now, and whatever balance is there in the sinking fund will be moved to the profit and loss account. So the balance of profit will be moved to profit and loss account. So sinking fund account debit to profit and loss account will be the entry that will be passed here. So this is how you solve a problem which is related to sinking fund. So I hope this illustration gave you a clarity about how to pass the journal entries, and moreover how to do the calculations in a systematic format. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.